Financial Resources for Real Estate Agents, sponsored by BHM Cash. The housing market crash of 2008 created a big problem for real estate agents. Most of them were out of business because the listed properties on their portfolio could not be sold due to negative market rates. Since housing realty is a business and involves people, most of these businesses closed down, leaving agents jobless and nowhere to go. It was time that the commission loans for realtors was created so that agents could have a credit facility that they could depend on during times of need. This type of loan also works perfectly for agents who are working on a commission basis and can receive a certain amount of cash without them waiting for their real commissions to reflect on their bank accounts. This kind of loan specifically answers to the need of housing real estate agents for a quick source of cash to be used for certain purposes such as an emergency, of an unaccounted bill, or for medical purposes. Since commissions are paid after the waiting period of 60 to 90 days after a sale is closed, for most agents this can be a long waiting period. Within this waiting period, there could be situations the agent would badly need the money and a financial resource is nowhere to be seen except the commission that is to mature at a certain period of time. This loan, then, is the answer for agents who need their hard-earned money at a shorter period of time. All the agent needs to do is apply for a loan wherein the requirements are some documents relating to the close of the sale, like a sales contract, or other documents required by the lender. Typically, a lender would allow about 80 to 90% of the value of the total sales commission to be lent to the agent. Once approved, the amount borrowed can be directly deposited to the realtor's bank account. Once the maturity of the commission, or upon the payment of the commission, this would be directly deposited in the lender's account, as this would act as a payment for the amount that was borrowed through this loan. Typically, this loan acts as a financial facility of an agent in case they need money for emergency purposes. But this loan can also be used for other purposes, such as reinvesting of the commission for operational purposes that involve marketing or sales tactics that could boost sales, and this could also be used to control cash flow within the business, thereby having a financial sound management of the business. As a conclusion, commission loans are very helpful to individuals who rely on commission as their sources of income. Since commissions are paid several months after a deal is closed, the amount that is advanced in this type of loan would be very helpful to the agent in the management of his or her finances on the long term. To summarize this article, this type of loan is a financial facility that agents can use without them having to wait for their commissions to be paid. About 80 to 90% of the expected amount of commission can be borrowed or lent to the agent. The requirements are simple, such as a contract, sales, or other documents needed by the lender as proof that a commission will be paid in the name of the borrower. This can also be used for other purposes, such as reinvestment of the commission for operational purposes of the business.